Hey, Bill, we're back again. Just talking a little bit about year-end tax planning. For all our small, medium-sized business owners out there that, maybe they had a decent year in 2010, there's some things they could do before December 31st if they want to bring that taxable income way down, because the new Jobs Act that was just signed by the president back in early November brought back some real tools for the small to medium-sized business owner.
Yeah. For one thing, if you think you're going to be looking at buying fixed assets next year, you might consider accelerating those purchases.
What do you mean by fixed assets? What
equipment?
If I own a trucking company,
trucks. Furniture and fixtures.
If I'm a doctor, the X-ray machines,
all the medical machines, restaurant.
And why should I do that before the end of the year?
Because what they call Section 179 expense allows you, instead of having to spread that cost over a number of years,
depreciate it over a number of years,
allows you to deduct it all in 1 year, up to $500,000.
So I could buy up to $500,000. I'm a manufacturer.
Okay.
And I use these CNC machines and these other big pieces of equipment that I myself would never get near, even though my father was a machinist at Pratt Whitney for 40 years. Buy these large pieces of equipment.
Yes.
And up to $500,000, I take a full deduction.
As long as you meet certain requirements. He can't put you into a loss situation. There's other certain requirements that you should come talk to us about.
I know there's a rule about the asset has to be placed in service. What does that mean?
Placed in service means it's got to be being used. So you
can't just be ordered and sitting on a shipping dock somewhere.
Right. Or you buy it if it's got to be installed. It's got to be installed and usable to be
in your business.
Yeah, in your business. Can't be sitting on the loading dock, on December 31st.
Okay, now I know there's like all these things we do, and we tell people about this stuff. There's a phase out. We'll let you deduct this $500,000 in equipment that you buy, but you can't spend more than it's $2 million.
Yeah.
So at $2 million, if you start to erode, for lack of a better word, what you can deduct. And once you're at $2.5 million, I understand,
it's done.
You're out of luck.
It's a dollar for dollar reduction over $2 million. So if you buy $2,250,000 worth of equipment that all qualifies, okay?
Yeah.
You can only deduct $250,000
because you're over the $2 million. But for most folks that don't spend $2 million a year on assets,
this is a great opportunity for small business.
Really drive your again. We don't do this just for the sake of reducing taxes. And what I've said to my clients is, listen, if you're planning to buy this piece of equipment or this machine anyway, first, second quarter 2011, if you're committed, you're going to buy it, you need it, it's a good business decision.
Absolutely.
If you could,
accelerate.
If you have the significant income.
Yep.
If you have the significant income in
can't put you into a loss position.
Correct.
It carries over. There's a bunch of technical requirements there, but that's what you need to be in contact with your tax advisor for. To go this on your own.
Do you have a good tax advisor?
Yes, I do.
Yeah, give me his name.
His name is
Section 179. When you guys are out at cocktail parties talking to people,
people
impress your friends. Say, you hear about these recent changes to Section 179, the Internal Revenue Code?
Yep.
You'll really make friends and influence people with that.
Absolutely, yeah.
You'll
be the life of the party.
Yeah, look at us. See y'all soon.